As of 9:55 a.m. Eastern Time, Friday, November 14th, 2025, the stock for Strive Inc., trading on the Nasdaq under the ticker symbol ASST, is at $1.20 per share. That's a gain of about 5 cents on the day, putting it up over 4.3% in the first hour of trading. Now, the immediate expectation when you see a stock trading at 120, especially one with a 52-week range that stretches from 33 cents to over $13, is that you're looking at just another highly volatile, low-priced tech or biotech name. It's the kind of stock that traders using the Robinhood app or SoFi Invest might watch for a quick day trade, but not something you'd typically allocate to a serious individual brokerage account alongside your Apple stock or Fidelity mutual funds. But the reality of what this company has become, especially in the last few weeks, is something entirely different and far more complex. The $1.20 price tag is masking a massive, high-stakes corporate transformation. This is no longer the company it was a year ago. It's not even the company it was a month ago. The reason it's seeing such massive volume, with over 30 million shares already changing hands this morning, is that Strive Inc. has aggressively remade itself into one of the market's newest and most leveraged corporate Bitcoin-treasury plays. Let's establish the common ground, because many investors looking at this stock on their Fidelity mobile app are completely missing the main story. The general belief is that ASST, which was formerly known as Asset Entities, is a small-cap tech company. You look at the financials, and frankly, they're terrible. Recent reports show revenues of only around $630,000, while operating income is massively in the red, with staggering negative profit margins. The earnings per share is negative, sitting below -$1. Based on this, the stock looks like a classic speculative gamble, a hope story. You wouldn't be asking for investment help to put this into your retirement account. You'd be looking at it as a pure lottery ticket. And that expectation, based on its old business model, is perfectly reasonable. But that is not what is driving this stock today. The reality is that Strive Inc. is the new public entity that recently merged with Strive Asset Management, the firm co-founded by Vivek Ramaswamy, and also completed a merger with Semler Scientific. This new combined entity has made a hard and fast pivot. It is no longer a small-time tech firm. It is a dedicated Bitcoin acquisition vehicle. The old fundamentals are almost irrelevant. The new fundamental is one number. It's Bitcoin holdings. As of this week, Strive holds 7,525 Bitcoin in its corporate treasury. But that's not all. Just a few days ago, on November 10th, the company announced it had acquired an additional 1,567 Bitcoin at an average price of $103,315 each. That is a single purchase of over $161 million. This company, with its tiny market cap, is now one of the most aggressive corporate Bitcoin acquirers on the market, and it's telling everyone that this is its new strategy. How is it funding this? This is where the story gets even more interesting for those practicing self-investing. Strive just closed an upsized initial public offering, not of its common stock, ASST, but of a new variable rate Series A perpetual preferred stock, which trades under the ticker SATA. They issued 2 million of these preferred shares at $80 each. The company was explicit. The proceeds are being used to support accumulation of additional Bitcoin. This is a sophisticated move. They are raising capital to buy an appreciating asset without diluting the common ASST shareholders. This is why the trading in ASST is so frantic. It has become a battleground. Let's look at the recent movement, because it's been wild. Yesterday, the stock fell over 11%. The day before that, it was down 7.5%. This morning's 4.3% pop is just a small recovery in a sea of volatility. The volume is the real tell. The average 3-month volume is around 69 million shares a day. Today, we're already at 30 million in the first hour. This isn't long-term Fidelity Wealth Management clients making a quiet allocation. This is a full-blown war between bulls and bears being fought on interactive brokers, trading platforms, and Robinhood stock trading apps. The bulls are betting that ASST is a leveraged proxy for Bitcoin. If Bitcoin's price runs, the value of Strive's massive treasury will explode, and the $1.20 common stock will have to be re-rated significantly higher. The bears are looking at the other side of this. The short interest in ASST is enormous, at over 18% of the float. On some days, the off-exchange short volume ratio has been over 50%. The fails to deliver data from just a couple of months ago showed millions of shares were failing to settle, a classic sign of extreme short-side pressure and locate issues. The bears are betting on the cost of this strategy. That new SATA preferred stock, the one used to buy all the Bitcoin, it carries an initial 12% annual dividend, payable monthly. That is a massive cash flow burden for a company whose core operations are already losing so much. The bear thesis is simple. The core business bleed, combined with the 12% dividend obligation, will force Strive into a cash flow crisis, forcing it to sell its Bitcoin at the worst possible time to cover its costs. This is why it's not a stock for SoFi active investing beginners. It's a stock for traders who have a strong opinion on corporate debt and the future of cryptocurrency. So I have to ask, and I want you to comment below with your take. Do you think Strive's Bitcoin acquisition strategy is a brilliant corporate move to build asset value? Or is it a desperate high-risk gamble that will end in a cash flow crisis? The business model itself is now split. You have the legacy asset entities business, which is in the tech and software space, but is for all intents and purposes a non-factor in the current investment thesis. Then you have the Strive asset management side, which is known for its anti-ESG family of ETFs like the Strive US Energy ETF DRILL and the Strive 1000 Value ETF STXV. This part of the business generates fees, but the dominant overarching story is the new Bitcoin-treasury. The company is signaling that its primary purpose is to acquire and hold Bitcoin. This merger and pivot has created a corporate structure that is complicated, and it's attracting the most aggressive traders for a reason. Looking forward, the possible scenarios are extreme. The expectation is that this is a $1.20 lottery ticket. The reality is that its future is almost completely detached from its own operations and is instead welded to the price of Bitcoin and the company's ability to manage the high-interest debt it has taken on to acquire that Bitcoin. If Bitcoin continues its upward trend, the bulls who bought ASST at $1.20 will look like geniuses. The value of the company's holdings will swell, dwarfing its market cap and forcing a massive repricing. The shorts will be squeezed, and that 52-week high of $13.42 could come back into view. However, the risk is just as severe. If Bitcoin enters a prolonged bear market, or even just trades sideways, that 12% dividend on the SATA preferred stock will be a relentless drain on the company's cash flow. The legacy business isn't profitable enough to cover those payments. This would force the company to either sell its Bitcoin to pay the dividend, which would signal failure, or default on the payments, which would send the entire house of cards tumbling down. This is why it's not a stock for SoFi active investing beginners. It's a stock for traders who have a strong opinion on corporate debt and the future of cryptocurrency. So as we watch Strive Inc. ASST bounce around the $1.20 mark, remember what you're really seeing. The market's expectation is that this is a cheap, volatile tech stock. The reality is that it's one of the most aggressive, high-stakes corporate experiments on the Nasdaq. It's a battle between a massive Bitcoin treasury and the high-interest debt taken on to acquire that Bitcoin. The $1.20 price isn't the story. It's just the entry fee to the arena.